12 financial goals you need to hit before your 40th birthday. They say life begins at 40, and until now, I still couldn't understand what that means. Because what about the things that we need to do before we turn 40? Is it not important? I think it is. For me, life begins when you start feeling this anxious feeling that your life is not turning how you want it to be. Whether you're in your early 20s or 30s, age 40 doesn't mean it's just the beginning of real life. Real life begins when you start getting conscious about what will happen to your future and when you start asking yourself, am I doing something for my future or am I just wasting time? Today, we'll talk about something very important before you hit 40. Any guesses? Before we start, comment down below what you think life begins at 40 means. And also, if you're new to the channel, subscribe! This is Finance Boss, and so, today, let's talk about the 12 financial goals you need to hit before your 40th birthday. Let's start with number 12. Create and use a budget. Do you have a monthly budget or only a hunch about how much you can spend? If you answer the latter, you're not alone. Only 41% of Americans use a personal budget according to one research. And we understand that there are many rules that claim you should have and follow a budget by the time you're in your 40s. By the age of 40, you should be able to calculate the exact amount of money you have available each month for rent or mortgage, utilities, bills, food, transportation expenses, leisure, and investments. This will serve as the foundation of your financial plan for debt repayment, emergency fund, building, and retirement planning. And it's unlikely that you can't do any of the things mentioned previously unless you first figure out how much money you have. Number 11. Open a Roth IRA. One of my preferred investment vehicles, a Roth IRA, is a tax-advantaged retirement savings account that permits members to contribute after-tax dollars. You won't get a tax deduction like with a regular IRA, but your assets will grow tax-free, and your withdrawals will be tax-free too. High-income earners should avoid Roth IRAs because they have severe income limits and contribution limitations. They do, however, provide tax-free growth and income during retirement, and no minimum distributions are required. It would be best if you started a Roth IRA as soon as feasible to take advantage of compound interest. Number 10. Have a fully funded emergency fund. Every stage of life necessitates an emergency fund. Your emergency fund should now have enough money to last at least 6 months. Focus on it. If you lose your job or become ill and are unable to work, your emergency fund will help you. It's only a short-term solution to avoid adding emotional stress to your problems. In your 20s, you may find it difficult to reach this aim, but in your 30s, you have little time to waste. Number 9. At least 10% of your income should be set aside for retirement. By the age of 40, you should be putting away 10% of your income in a retirement account. That may appear to be a large number, but it isn't. Make it a habit to include it in your budget and stick to it. Work your way up to 10% if you haven't reached it already. To ease your way into higher donations in the future, increase your contribution increments every 6 months or so. Number 8. Student loan repayment. To make payments more manageable, many graduates delay or opt for an income-based repayment plan. This only serves to delay what is inevitably going to happen. Rather, plan to pay off your debts before you're 40. Your loan will be paid off in 10 years using the usual repayment plan. Check to see if it's possible. If not, go as close as you can to it so you can repurpose those assets for retirement, home ownership, or simply enjoying life. Now, if you've been getting value from this video, pause this video right now, hit the like button, and click subscribe if you're new. Now, let's continue. Number 7. Buy life insurance. Life insurance costs rise dramatically by the time you reach the age of 40. Get your life insurance situation in order first. Your financial and familiar responsibilities grow exponentially. You work tirelessly to provide a decent lifestyle for your family. In addition, you must protect them from death and disease. Consider your biggest outgoings and people you'd like to keep safe. Number 6. Invest in yourself. It's a lifelong endeavor. but one that you should have mastered by the time you reach 40. You've probably spent the last 10 or 20 years concentrating on others or advancing in life. It's now time to concentrate solely on yourself, learning something new, read a book, or simply relax. Consider your budget as well as your mind and body. You will make better selections if you're better educated. The healthier you are, the fewer medical expenditures you will have, and the more life you will be able to enjoy. Number 5. Open a college savings plan. The average American parent has $18,000 saved for their child's college education, with children aged 13 to 17 having $22,000 saved. Despite the fact that tuition costs vary greatly from school to school, this sum would not be sufficient to fund a 4-year education without taking out any loans. Save for your children's education as soon as possible if you have children. Number 4. Retirement. Planning in your 20s and 30s, you usually don't think about retirement. As you enter your 40s though, you can no longer afford to put it off. Long-term investing requires a lot of patience. The longer you put off making a long-term investment, the more difficult it will be to meet your objectives. Number 3. Plan for your children's education. It's not cheap to pursue a degree in higher education. As a result, you must be prepared to meet the long-term financial demands of your children. As you enter your 40s, your children will be starting college and you will be approaching retirement. You must find a means to match these difficult financial objectives with the borrowings required to achieve them. Number 2. Invest in a filing cabinet. Throwing all of your W-2s, pay stubs, and other financial paperwork into your garbage drawer might have worked as a filing strategy while you were in your 20s. However, it's likely that your finances have become more difficult as a result of this. You probably have more bills to pay, more insurance policies to manage, a mortgage to pay, and an increasingly complex tax credit system to comprehend. Lastly, and our number 1, draft a will. Nobody has any idea how long they will live. Undivided property and riches among the heirs might result from a sudden death without a legal will, which might later turn unpleasant. It's highly recommended that if you have accumulated sufficient fixed assets and wealth, you should prepare a legal will with the assistance of a skilled lawyer detailing the distribution of property and wealth among your heirs. It's also critical to ensure that your power of attorney is valid for a sufficient period of time. Woo! That's a lot. If you're willing to do even just one of these, start doing it now. No more, I'll do it tomorrow. Life is short, and if you want to do all of it, make sure you note it because it's a lot. Well, it might help you a lot, but it'll help you big time. Just always remember one step at a time. No pressure. I hope you enjoyed the video. This is Finance Boss. Subscribe. Until next time. Bye!